One Wall Street firm has decided on its favorite fintech, William Blair, initiating coverage on Affirm with an outperform rating, saying it believes alternatives to traditional finance will be popular among younger consumers. Analysts saying there that Affirm is a trailblazer in the space because it provides easy-to-understand finance products, flexible payment options, transparent pricing, no late fees, and clear disclosures. Wells Fargo also boosting its price target on the stock today from $55 to $70. The stock right now down just barely here, but it is up about 5% over just the past 2 days, and week to date, it's up 6%. The pair of upgrades ignoring the new report from the Consumer Financial Protection Bureau. The CFPB conducted a study which found consumers with poor credit scores do make up a majority of buy now, pay later borrowers. Well, what does that really mean? Affirm co-founder and CEO Max Levchin joins me now in a Fox Business exclusive. Max, let's start off with the Valentine's Wall Street is bestowing on you. I mean, this is certainly welcome, I'm sure. What would you say is the number one thing that probably grabbed their attention to get you those upgrades?
Well, it's very nice of them to notice. And Happy New Year. I think, it's been a well-kept secret for about a decade now that young people dislike, maybe even strongly dislike, things like hidden fees and compounding interest and all sorts of other shenanigans that the financial services industry has made a lot of its profits over the last many decades. Affirm is a great alternative. We don't charge late fees. We don't compound interest. We don't do deferred interest and all the terrible things that people love to hate. We are a simple, easy to use, great alternative to credit cards. And it's been growing really well for the last many years. And I'm glad others are noticing.
Well, I wouldn't, yeah, exactly. I wouldn't say that it's in a nascent stage of the industry, but buy now, pay later has been well entrenched. And yet you look at what happened this past holiday season, and you had Adobe, which puts all this together in its analytics division, said that buy now, pay later from November 1st to December 31st saw record holiday sales, $18.2 billion. I'm interested to know the demographic of your number one buyer.
It certainly skews young. The generation that we serve, it's more than one at this point, but millennials certainly anchored the core Affirm user base. These are the kids that witnessed 2008. They have a vivid memory of housing being sold short and credit card debts driving people to bankruptcy, and they wanted an alternative. And that's when we came along and said, here we are. We're founded just a couple of years after the great financial crisis, specifically to deliver honest financial products. It's in our mission. And that was the anchor tenants that we've grown really, really well with them. And now that their successors, Gen Z, is right here with us, coming of age, getting their own financial reality in order, we are serving them too, and that's the faster growing group now, and we expect to continue growing well with folks that are just starting out their financial lives.
How will the interest rate picture going forward affect them if the Federal Reserve decides that the economy is stable enough that it doesn't need future rate cuts, or at least as many interest rate cuts as people had hoped? That means that rates are higher, and we might see a pause. That's what the odds are for the Fed funds futures coming up in this January meeting. How do you anticipate or model for what might happen to their buy now, pay later, I suppose, spending that they do?
I do not have a crystal ball, so seeing the future is always tricky, but we have performed through the lens of both growth and credit performance and consumer demand really well during the elevated rate period. Let's not forget, we're down from peak rates very recently. Affirm performed really well financially. Just look at our last couple of quarters in the 5% territory. Folks need more access to credit. They really need honest financial products, honest access to credit, something that they can actually understand while they're using it. And we anticipate being there to serve them in the periods of high rates and low rates.
Right, we're at 4.25% to 4.5%, so you're doing just as well as, and possibly better than when rates were even higher. Very interesting. Talk about the partners that you have. Who saw? I know you're in a quiet period, so we don't want to, put you in a bad position here. But whom do they flock to when they're deciding where they buy from?
Yeah, I can certainly say that we just had a yet another greatest holiday shopping season yet. If you're growing as well as we do, it's not a difficult, not a tricky thing to say. Good holiday season. We saw really strong demand in general merchandise. That's primarily really a reflection of the fact that folks have absolutely taken Affirm mainstream. When they go for the Black Friday shopping list, they look to Affirm to provide services to them, and that's what we did. But maybe a couple of sort of cool highlights that are slightly off the beaten path. So I would call this holiday season sort of a great revival of the COVID categories. So if you looked for the last couple of reports we put out the last couple of years, electronics were really kind of the unhappy category. Folks bought so many nice big screens to outfit their home offices, their home theaters during the lockdowns that nobody needed a big TV. That is no longer true. People are buying electronics. We saw the beginning of that in the summer quarter, and we really did not see much slowdown during Black Friday. Travel is not over. Folks have said, we're all traveled out now. The lockdowns came and went. Now we're, not true. Revenge travel is still a thing. People are taking cruises. They're flying to faraway lands. That's still happening. Apparel was one of the strong categories for us.
Okay.
So many things that people stocked up on during COVID, I think we're finally out of that. I don't need so much of that anymore. I can now buy it again.
What do you have to say about the Consumer Financial Protection Bureau's new study that they just dropped this week that says that the people who buy most from buy now, pay later, they're the ones who are in a poor category when it comes to income? Do you get concerned that sometimes people are buying too much? I mean, how do you gauge that? Do you watch? Do you have a department that makes sure people don't get into trouble?
The entire company is that department. Credit is job number one. If you looked at our external communications, but literally every single all-company email I send, a vast majority anyway, starts with, just remember, credit is job number one. And the numbers speak for themselves. You can see in every one of our published reports over many quarters, we are substantially lower in losses and delinquencies than the credit card industry. So I can only speak to the Affirm consumer base, but we are watching credit all the time and performing really, really well. And there's a reason behind it. Our business model is designed to only work if credit works for us. We don't charge late fees. There's no income there. We don't compound interest. There's no tricky hidden ways of making money other than if folks we lend money to pay us back on time every time. And so long as you have that clear in your head and you actually mind credit and you're good at underwriting, which we certainly are, it works just fine, and it really serves the folks that need it.
Max Levchin, good to see you.